In today's video, we're going to zoom in on the Russell, specifically this setup right here, which triggered during the lunchtime hour. Now, traditionally, we like to avoid trading during this hour. It's an hour in which I found most traditional setups don't work, setups in which you're, say, looking to buy the dip. Here's an example of that. We had a bullish trend, one in which you might have the green light to buy the dip. We hit our volatility box levels, and you can see how here trend tends to exhaust. We don't really see the same follow through with the buyers, but instead we see sellers kick in. Now the question I'm looking to answer in today's video is what is the difference here between something like a trend exhaustion, especially during this lunchtime hour, versus simply just a setup we want to avoid. Now to try and find signs of that, we come into a 1-minute time frame chart, especially with our futures markets. Now on the 1-minute time frame, we can see here that we had our fade setup rules being met. That involves price action breaching our volatility box models. That starts with the sign entry lines all the way up to the clouds. So we had price action breach our sign entry line. And then we're looking for these edge signal confirmations, these red arrows for bearish setups or green arrows for bullish setups. In this case, we had 1, 2, and there's a third one hiding behind this chart bubble. That told us we're officially now in overbought territory, looking for this trend to exhaust. Now we're looking for signs of that trend exhausting. Now here, given that this was the lunchtime hour, I'm not really looking to be too aggressive and actually take this fade setup. However, what you'll start to notice is this trend slowly starts to trickle down and it breaks apart. In fact, this red candle right here is that first red candle in which this trend has completely switched from what was so far a period of either acceleration or accumulation, which are both the bullish market stages, to now we switch to this market stage of distribution, telling us that we're now looking at this bearish switch. How do we know that this market trend switch has changed? Well, simple. You can see that the bearish crossover with the price crossing below the market pulse line. You can also see that the line has stopped printing green, telling us that our volume weighting moving averages are no longer stacked. And slowly after that, you'll see that the market pulse transitions to this period of deceleration. So by using the volatility box levels here as your cue of your first sign of trend exhausting, then looking for the market pulse to show you signs of trend breaking down, that involves the current color trend starting to fade, and you start to see the market pulse line go from green, in this case, to gray, to slowly red. And it's this green to gray period where you'll find that trend actually starts to have the initial phases of switching, That's the ideal place that you might look for an entry, especially during hours like this one in which you traditionally would be avoiding a trade. You're looking to front run a potential trend reversal. Now, other ways to take advantage of this trend reversal would be to take advantage of a momentum switch. Now here, I don't have the momentum cross loaded on, but if I did load that on my chart, this is simply looking at the 3 EMA to cross either above or below the 8. Combine that with the picture we just discussed. We have so far a bullish trend that has now breached our volatility box levels. That tells us that we're looking for this trend to exhaust, and we now have a volatility edge. We see 3 edge signal confirmations. That tells you that with this volatility edge, we're officially now in overbought territory, looking for price to show signs of reversing. This first pink dot is that first sign of momentum switching. This is your first sign of the 3 EMA crossing below the 8 EMA. We then see the bulls try to defend price action towards the end of the lunchtime hour, and the bears reclaim one more time. And ever since that moment, you can see that the bulls don't really have a lot of strength. They try one last time towards the end of that lunchtime hour. Again, the sellers very quickly push them straight down. So it's these momentum bursts that you can also use for very quick cues for when you're looking for that entry moment. So here we talked about signs of a trend exhausting. We talked about when you had a volatility edge. We talked about when you saw signs of overbought, oversold confirmations. And we talked about when momentum actually switches. Take your pick in terms of the one that best fits your trading style, but across the board here, these are ways to take advantage of this really nice reversal inside of the Russell. The first target for this trade was a risk of 4 points. We made that fairly quickly. The second target was closer to 11 points, which was a nice home run trade, which we did end up hitting later on in the afternoon. I hope you found this video useful for all of our Futures Volatility Box members in understanding how to take advantage of our Futures Volatility Box levels and take advantage of all of these signs of the trend reversing and pinpoint exactly where you'd like to enter. Take care, everyone. Thank you for listening, and I'll see you in our next update.